Hello traders everywhere, Adam Hewison here, looking at gold today. That's right, spot gold. We're looking at gold, and it's a long-term chart going back to 2006, and as you can see, the trend has been pretty much up until we hit a high of 1900, and at that time everybody was talking about gold going to $2,000, $2,500, $5,000. It just got crazy, and of course from there we slowly eroded down and drifted down to where we are today. Now where we are today is a pretty important element. Right around this 1200 level is very, very good support in my opinion. And the reason why it's good support is because of this. We're going to go to our Fibonacci tool. We're going to click from the very highs, click and hold, drag down to the lows, the most recent low, major low, which I consider to be right here. And it takes you right back to the 50%, 61% Fibonacci retracement levels, which offer good support. The other thing is we're very oversold. You can see here on the RSI, indicating we're going to see a bounce. We've seen a little bit of a bounce today. Maybe that's the beginning of a low. Other thing that's important here, and I want to share with you, looking at the quarterly charts. So I'm going to go to the quarterly charts right now. Let me just take the Fibonacci off. And how I do that is simply click here, pull down to the quarterlies, and you can see the quarterlies. The thing I want to point out to you here on the quarterlies is this. The thing I want to point out to you on the quarterlies is this. The RSI right here is at 50, and it has been since about April of 2013, indicating this is good support for this market. That's on the quarterlies. That's long-term support. So you've got the Fibonacci on one end, you've got long-term support on the RSI. Let's take a look at some of the other clues that we're looking at also in gold. So let's go back to our daily chart and let's scope this into, let's say, the last year. So what we want to look at here in the last year is, I'm going to scope this out just a little bit further. That's what I want to see. Okay, so if you look at the last year in this market, and we pointed this out last week, you have a low here, and a potential low here. Now the potential low there is, if you measure this out, is pretty much right on the money time-wise, from July through here to late December, all the way through to mid-June. So you can also potentially draw a trend line. I'm going to draw this by hand, but you get the idea right across here, indicating you could see quite easily a rally back up to the 1350, 1370 area from current levels. If we were to exceed that, then I think we've created a really significant low for this market. One thing to look at the RSI on the daily. If we see this market go over there and close over there, then I think we've got ourselves a cyclic low, and we're going to point higher. That's just how we're seeing it right now. Another area to look at, of course, is our trade triangles right here. For the weekly trade triangle to turn green, that would be another indication that the market has gone higher. If we're correct in our analysis, the next high, you measure this high and this high, is going to come around mid-August. Okay, so if we're correct, we're going to see gold basically rally up to mid-August. But wait for some of the signals to kick in before you get excited about buying gold today or tomorrow. I think there's lots of opportunity, but please be aware that these are pretty important lows, the cyclic low periods in gold, and I think we're going to see this market improve from current levels. Hey, this is Adam Hewison for Market Club. Thanks for stopping by. Every success trading gold and using the trade triangles. I'll see you soon.
You can find Adam Hewison as a regular contributor on Bloomberg, Business News Network, CNBC, and Fox Business News.